Today what we are going to learn is cost accounting system. Please understand, we normally write down books of accounts only for financial accounts. That is, we pass journal entry, debit, credit only for financial accounts. But if you want to find out cost of production, what is costing profit and loss account, then you even draw costing accounts. And as it is accounts, there will be journal entry, there will be ledger accounts, and even sometimes there will be trial balance. Cost accounts is divided into two parts: integrated cost accounts and non-integrated cost accounts. What are integrated cost accounts? Try to concentrate. Financial books of accounts. What is financial books of accounts? Trading account, profit and loss account, balance sheet that we prepare in accountancy is financial books of accounts. And costing books of accounts are prepared combined. Combined is also termed as integrated. So they both are same. You maintain only one set of books of accounts, that is integrated cost accounts and financial books of accounts. What is non-integrated books of accounts is you keep financial books of accounts and costing books of accounts. These are separate sets of books of accounts. So there will not be only one set of books of accounts, which is trading account, profit and loss account and balance sheet. There will be another sets of books of accounts which will be costing books of accounts, non-integrated cost accounting system. What we are going to learn first is non-integrated cost accounting system. In our syllabus, there is also integrated cost accounting system. We are learning accounting system, so we will have to learn journal entries, we will have to learn ledger accounts, we will have to learn trial balance, whatever comes into picture. We are going to start with non-integrated books of accounts. Non-integrated books of accounts, and this is cost accounting system. So when you started learning your financial books of accounts in your 11th standard, then you learned it in 12th standard, then you learned it in foundation. Costing books of accounts we are starting it today. So we will have to learn how to pass journal entry, how to prepare ledger accounts, and how to prepare trial balance. Yes, there will be no trial balance. There is only journal entry and there is only ledger accounts. Normally in accounting, we first learn journal entry and then we learn ledger account. Let us go for learning cost accounting system other way around. We are first learning ledger accounts and then we will be learning journal entries. So let us try to learn ledger accounts. What happens when the transaction happens, what journal entry will be passed, and where in ledger account it will be posted. Please understand, we are learning separate costing books of accounts. So we are not concerned with what financial accountant has passed, what normal accountant has passed journal entry. We are not concerned about it. We are preparing our separate set of books of accounts. This is non-integrated costing system of cost accounting. We are going to draw some ledger accounts. Now it is advisable you don't draw it because you will not be able to cope up with me. First ledger account that is prepared is raw material or stores control account. Now I will explain each and every account. This is practically raw material stock account. And when it is a stock account, what is the rule for stock account? Stock is a real account. Debit what comes in, credit what goes out. So whenever raw material will be coming in, I will be writing it on debit side. Whenever raw material will be going out, I will be writing it on credit side. This is it is what it is termed as raw material or stores control account. Why the word control is used, that also will be understanding. Raw material or stores control account. Let us try to understand what will come on debit side of this account. When you purchase a raw material from the market, from the creditor, or you purchase it on cash, what journal entry we pass in financial books of accounts? Purchase account debit or raw material account debit to cash. And if we have purchased it on credit, it is raw material account debit to creditors. We will be passing similar type of journal entry. Raw material account debit. Why it is written on debit side? Debit what comes in. If you purchase raw material, material will come in. Your stock will increase. I am writing it in second place. It will be to cash. The answer is no. Why? I don't prepare cash account in cost accounting system. I don't want my cash balance. What is my cash situation? I don't want my profit and loss which is in financial books of accounts. I don't prepare a cash account. But to pass a journal entry, I require a second effect. First, debit effect is raw material stores control account debit. 2. I will be preparing a temporary account which is general ledger adjustment account. It is also termed as GLA account. Why I am preparing it? Because I don't have cash account. I'll have to pass credit entry. I will prepare GLA account. Suppose I have purchased raw material worth rupees 10,000. So I will be writing it on debit side, which is writing it on debit side 10,000 rupees. I have purchased raw material. So what journal entry I am passing? Raw material or stores control account debit to general ledger adjustment account. Please understand, as it is a stock account, there might be opening stock. And here there was opening stock of 5,000 rupees. Sir, by which journal entry opening stock will come? It will not come by journal entry. It will be carried forward from last year. And if you are preparing this monthly, it will be carried forward from last month. It is opening stock of raw material. If you return this raw material to your supplier, raw material stock will decrease. And so I will be writing it on credit side. By return to supplier. What is the journal entry we pass in financial books of accounts? We debit the creditors and we credit raw material, or we credit goods account, or we credit purchase account. So creditors account debit to purchase is our journal entry in financial books of accounts. What journal entry we will be passing in costing books of accounts? Please try to understand. This will go out, so raw material account will be credited. Raw material control account will be credited. What will be debited? Creditors account. I don't prepare creditors account in cost accounting system. I don't prepare cash account. I don't prepare debtors, creditors, none of such type of accounts. I'll be preparing cost accounting system. So I will be writing down GLA. Yes, in bracket I can write down it is nothing but return of raw material. How many raw materials are returned to suppliers? It is 2,000. We are just understanding one thing, which is raw material stores control account. We have passed a journal entry GLA account debit to raw material accounts when raw materials are returned. Now try to understand how many raw materials were issued. Before that, I am writing down closing balance. My closing balance was 3,000. So how much raw materials or stores were issued to production is 10,000. If you balance both the sides, it is 15,000. This should be 15,000, but 10,000 is the balance. So 10,000 will be issued to production. Please concentrate. If I have issued it to production, I have issued it to production. Then say I have issued, I will be writing 6,000. 6,000 rupees raw material to production. Why it is credited? Because it is going out, it will be credited. Where it will be debited? Please concentrate. Still there is a difference of 4,000. I'll explain you what is that. But 6,000 raw material is issued to production. As we have learned somewhat costing, we should be knowing this account, which is WIP account, work in progress account. Whatever raw materials are issued to production, they will not immediately be converted into finished goods. So I am not adding it in finished goods account. This is finished goods account. I am debiting it to work in progress account. Work in progress account debit to raw material control account. How much rupees? 6,000. So whatever raw materials are issued to production goes where? It goes directly over. Your raw material stock will decrease. Now it is a cost of WIP. Now it is cost of work in progress. I explained you why we are not debiting it to finished goods account. Just because finished goods account right now is not in picture. First, raw material will be issued to WIP, and WIP will convert goods into finished goods and then issue it to finished goods account. Sir, what about 4,000? There is a balance of 4,000 also. So I will be writing down over here by WIP. So whenever the materials are issued to production, what is the journal entry passed? WIP control account debit to raw material control account. This is the journal entry which will be passed. Sir, what about 4,000? This 4,000 are raw material or stores which is issued to production for maintenance or for something else. But it is indirect raw material. So they are not directly used in production. They are indirectly used in production. If something is indirectly used in production, you know it is not a direct cost, it is an overhead cost. And so if it is an overhead cost where we are sending it to the factory, it will be added to factory overhead cost. And how much is the amount? 4,000 rupees is the amount. I will be preparing one more account, which is a factory overhead or production overhead control account. It is termed, let us speak it short, factory overhead control account. It will be coming on debit side to raw material control account. This raw materials are issued for say maintenance, for some servicing. These are indirect raw material issued to production. So they directly don't go into WIP. They will indirectly go into WIP, but they directly does not go into WIP. So this 4,000 is coming over here. This is 4,000. Which account is tallied? Raw material or stores control account is tallied. Debit what comes in when we are purchasing it, opening stock will be on debit side. Credit what goes out when we return the material to supplier, it is on credit side. When we issue directly to production, it will go in WIP account. When we issue indirectly to production, it will go in factory overhead control account. And my raw material or stores control account is tallied. Let me go to another account, which is nothing but wages control account. First, I will incur the wages to cash. No, I am not preparing cash account. Which temporary account I will be preparing? General ledger adjustment account. So I will be writing to general ledger adjustment account. Sir, there are n numbers of entries in general ledger adjustment account. We have not prepared general ledger adjustment account. Yes, we have prepared, but we have just not written it. Let me write it down. GLA 10,000 is debit. So GLA 10,000 will be credit in GLA account. I have prepared GLA account by raw material control account. How much rupees? 10,000. Another GLA was credit side. So in GLA account, it will come on debit side, 2,000 rupees. In GLA account, debit side, to raw material control account, 2,000 rupees. And we are doing wages control account. There was no other point of GLA account. Now we are going to this wages account. We have paid wages to worker worth rupees 50,000 in current year. So we will not pass journal entry wages account debit to cash. We will pass journal entry wages account debit to GLA account. So what will be GLA account will be credit side by wages. It will be by wages, which was 50,000 rupees. And wages control account is debited by 50,000 rupees. Do you understand? We will not credit cash, we will credit GLA account instead. Now, are they direct wages or indirect wages? Both wages are written in wages control account. So only it is termed as control account. First it records it, then it decides whether it is direct or indirect and will give it to proper places. If they are direct wages, let me take 40,000 rupees wages are direct wages. These are direct wages. How much? 40,000. If 40,000 are direct wages, it should be going to production. But understand, this wages will not directly create finished goods. They will go into WIP and ultimately it will result into finished goods. So this 40,000 will go in WIP. In WIP debit side, I will be writing down to wages control account. How many rupees? 40,000 rupees. So this goes over here. All the direct expenditure, prime cost. Say this is direct material, 6,000. This is direct wages, 40,000. This all are direct thing, will always directly go in WIP account. This is by WIP. Sir, what about 10,000? If they 40,000 are direct wages, 10,000 will be indirect wages. By it is indirect wages. How much rupees? 10,000. My wages control account is tallied. Sir, where this 10,000 will go? 10,000 will go in factory overhead. Indirect wages are overhead. Direct wages are directly related to production. Indirect wages are overhead not related to a particular product. It will go in factory overhead. Indirect wages. I will be writing down wages control account, not indirect wages. Wages control account. Of how much? 10,000 rupees. So this portion, indirect wages, will directly go over here. Are you all getting it? Raw material and wages are cost account. Direct cost will go in WIP account and indirect cost will go in factory overhead. It is as simple as this. This was our second account, which is tallied, which is wages account. We are going to factory overhead account. In factory overhead account, we are already having two things: raw material control account 4,000 and two wages control account 10,000. What are this? They are indirect material cost, they are indirect wages cost. Indirect material and indirect wages are nothing but production overhead or factory overhead. I will be writing down other overheads also to whenever it is incurred, when the overhead is incurred, I will be passing a journal entry. See, I pay electricity bill, which is a factory overhead. Electricity bill of a factory. It is a factory overhead. I will pass a journal entry in my financial books of accounts, electricity account debit to cash. In cost books of accounts, I will be passing journal entry, factory overhead control account debit, not to cash, to general ledger adjustment account. And how much amount I have incurred? I have incurred 1 lakh rupees as other factory overhead, where it will go to GLA account. Because I am not having any cash account in my costing books of accounts, it will go in GLA account. GLA account, it will be written credit side. GLA account, it will be written credit side by factory overhead control account. How much rupees? There it was debited, here it will be credited. And we are going to factory overhead. Please try to concentrate. We are learning in detail as this is the base question. This is 1 lakh rupees. Is factory overhead absorbed or factory overhead incurred? It is a factory overhead incurred. You pass journal entry for electricity bill what? Electricity account debit to cash. It is actual figure which is incurred. Actual factory overhead which is incurred. But in costing, we don't go with the concept of incurred. We go with the concept of absorbed. We go with the concept of absorbed. How much factory overhead are absorbed by production? How much factory overhead is absorbed by production? We are going to write it down on credit side. By this is factory overhead absorbed. Now, how much is total factory overhead? Not 1 lakh, it is 1 lakh and 14,000. Why? 1 lakh is electricity bill, 10,000 is indirect wages, 4,000 is indirect material. So, total factory overhead is 1 lakh and 14,000. Absorb. Sir, how we absorb the overhead? We have done 2 full chapters for it. Overhead and ABC. How we absorb, that is a different thing. But how much is absorbed is 1 lakh 4,000. Say we use a blanket rate. By blanket rate, overhead absorbed was only 1 lakh 4,000. If the overhead absorbed was 1 lakh 4,000, where it will go? Who has absorbed it? It is absorbed by production. If it is absorbed by production, and production means WIP. Production basically means WIP. So where this will go is WIP. What will be the journal entry passed? Journal entry passed is the WIP account debit to factory overhead control account. What is happening? We are absorbing or we are incurring? We are absorbing the overhead. Once again, WIP account debit to factory overhead control account. So WIP, it will come on debit side to factory overhead control account. It is how much? 1,04,000. And this will be always absorbed. This will always be absorbed. All right. What is the difference in factory overhead or production overhead control account? This was 1,14,000. This is 1,04,000. So difference is 10,000. Difference is 10,000. Out of which it is said in the question that factory overhead of 2,000 is to be carried forward for next month. So it is possible it was under absorbed. What is 10,000? Under absorption of overhead. It was under absorbed, which is going to be covered in next month. So I will be transferring it to next month, say 2,000 rupees. But let me in this case consider there is no carry forward. What is under absorption of overhead? Sir, it is under absorption. Yes. How much is incurred? 1,14,000. How much is absorbed? 1,04,000. What is under absorption of overhead? 10,000. Go to overhead chapter. If there is under absorption of overhead, you will have to see whether it is normal or whether it is abnormal. I am telling you 6,000 is abnormal. By this is abnormal. If 6,000 is abnormal, where abnormal under absorption of overhead will go? It will go in costing P&L account. And it is how much? 6,000. Sir, are you having costing P&L account? Yes. There is a costing P&L account and it will be written on debit side. There it is written on credit side. Here it will be written on debit side to factory overhead abnormal under absorption. And it is how much? 6,000 rupees. So this is, I'm just making it small for some time. There is this 6,000 rupees will directly come over here. We have learned it, right? Normal and abnormal. Abnormal is directly transferred to costing P&L account. But if it is normal, we are going to normal. Factory overhead. What is the balancing figure? Balancing figure is normal, which is 4,000. Where normal absorption or under absorption of overhead is transferred, it is transferred to WIP, it is transferred to finished goods, it is transferred to cost of sales. In which ratio? In number of equivalent units. In WIP, we also convert it into equivalent units. Here we are distributing just by numbers. 2,000 we have transferred to WIP. 2,000 rupees we have transferred to WIP. 1,000 we have transferred to finished goods. And 1,000 we are transferring it to cost of sales. So this is what we have already learned. Under absorption of overhead, abnormal is transferred to costing P&L account. Normal is transferred to finished goods. It is transferred to WIP and it is transferred to cost of sales. How much is transferred to WIP? Is 2,000. So 2,000 WIP will be debited to factory overhead under absorption 2,000 Then 1000 will be transferred to finished goods. This is finished goods control account. To factory overhead under absorption 1000 rupees. And 1000 rupees will be transferred to cost of sales. To factory overhead under absorption 1000 rupees. So technically, where we have transferred under absorption of overhead, try to concentrate. We have transferred 2000 to WIP. We have transferred 2000 to WIP, 1000 to finished goods, and 1000 rupees to cost of sales. If you don't understand this, go to overhead chapter and understand under absorption of overhead. Two parts: abnormal directly transferred to costing P&L account. This 6000 rupees we have transferred to costing P&L account, and others normal will be transferred to cost of sales, finished goods, and WIP, and we have transferred it in that manner. And hereby we finish factory overhead or production overhead control account. We are going to administrative overhead control account. Administrative overhead control account. Again, same points will be repeated. Administrative overhead control account to cash. Whenever the administrative overhead is incurred, it is to cash. We don't prepare cash account, so we will just write down to general ledger adjustment account. And how much is factory overhead is 60,000 rupees. Where I will be transferring? I will be transferring this to general ledger adjustment account. It is by administrative overhead. Administrative overhead is nothing but 60,000. Same manner, where administrative overhead is absorbed, this also we have learned it in cost sheet. If administrative overhead is related to production, it should be absorbed by WIP, that is cost of production. If administrative overhead is related to production, then it should be absorbed by cost of production. So to GLA account, I am writing down 40,000 rupees administrative overhead are related to production. I am writing in bracket, it is related to production. If they are related to production, where it will be transferred? It will be transferred in WIP. If I transfer it into WIP account, here is my WIP account. How much I need to transfer is 40,000 to administrative overhead, 40,000 rupees. What is the journal entry that will be passed? WIP account debit to administrative overhead, because this administrative overhead were related to production. We have also understood the name of this type of administrative overhead, right? Quality checking, maintenance, these are or staff for maintenance, you are paying them salary. Their administrative overhead related to production should be debited to WIP. There are administrative overhead not related to production. It will be not related to production is transferred to finished goods control account. Which is nothing but So administrative overhead not related to production is 20,000 and total administrative overhead is absorbed, which is 60,000. Sir, if there is under absorption in administrative overhead, then you may transfer it to finished goods account or cost of sales account. Normally it is transferred to finished goods account or cost of sales account. But 20,000 rupees are for production. I will not be transferred, not related to production. I will not be transferring it to WIP, but I will be transferring it to finished goods control account. To administrative overhead absorbed, which is 20,000. I am once again repeating administrative overhead control account. On debit side, what was incurred? On credit side, whatever is absorbed. If it is absorbed by production, if they are administrative overhead related to production, it will go in WIP. If it is not related to production, it will go in finished goods. This is nothing but administrative overhead. We are going to selling and distribution overhead. Next is selling and distribution overhead. Again, same thing. Selling and distribution overhead incurred. To cash? No. To general ledger adjustment account. Say it is 70,000 rupees. In general ledger adjustment account, it will be credit side 70,000 rupees by selling overhead control account, which is 70,000. All right, let me take under absorption even in selling and distribution overhead. Selling and distribution overhead will be transferred to cost of sales. It is never transferred to even finished goods. Finished goods is nothing but how much production cost you have totally incurred. This will be directly transferred to cost of sales. So whatever is absorbed, how much is absorbed? See, this is incurred and this will be absorbed. And where it will be absorbed? It will be absorbed by cost of sales. It is absorbed by cost of sales and it is how much? 60,000 rupees. Cost of sales is over here. It will be written debit. Selling and distribution overhead will be nothing but 60,000 rupees. And it will always write down costing, always write down absorb. As it is incurred, we are writing it on debit side. Whatever is absorbed will be absorbed by production, sales, and in profit and loss account, ultimately that figure will go. Now, what is under absorption of selling and distribution overhead? Please understand, if there is under absorption of production overhead, our concept is very much clear. If it is abnormal, we transfer it to costing P&L account. If it is normal, we divide it into WIP, finished goods and cost of sales. But if it is selling and distribution overhead, selling and distribution does not go into WIP and finished goods. So selling and distribution overhead under absorbed, you can directly transfer it to costing and P&L account. And normally when there is under absorption of selling and distribution overhead, it will always be transferred as abnormal to costing and P&L account. By under absorption, costing and P&L account, which is nothing but it is not transferred to WIP or finished goods. Selling and distribution overhead is not absorbed by WIP and finished goods, so it will be directly transferred to costing P&L account. I will be directly writing down in costing P&L account debit side. It will be to selling and distribution overhead. It is under absorbed. and the amount was 10,000. Which account I have completed? Selling and distribution overhead control account. Debit side, whatever is incurred. What is incurred in our case? 70,000. So selling and distribution account debit to cash. No, because we don't prepare cash account. Selling and distribution account debit to general ledger adjustment account. And on credit side, whatever is absorbed by cost of sales will be written on credit side. Whatever is under absorption will be directly transferred to costing P&L account. We will not be transferring it to WIP or finished stock account, nor even to cost of sales account. We will be directly transferring it to costing P&L account. This is five accounts we have done: raw material control account, wage control account, factory overhead, administrative overhead, and selling and distribution overhead. Meanwhile, we have prepared WIP control account. Please understand, this account is also nothing but WIP stock account. Whenever stock increases, it will be written on debit side. Whenever the value of stock increases, it will be written on debit side. Whenever stock decreases, it will be written on credit side. Now try to understand. Let me change the color even. In WIP, there was already an opening stock of 20,000 rupees. There was already WIP opening stock of 20,000 rupees. So what is the total cost of WIP? In our case is 20,000, 6,000, 40,000, 1,04,000, 2,000 and 40,000. This is a total cost of WIP as far as our case is concerned. And what is the total? I am just finding it out. It is 20,000 plus 6,000 plus 40,000 plus 1,04,000 plus 2,000 plus 40,000, which is nothing but 2,12,000. Total is nothing but 2,12,000. Out of which, how much finished goods are manufactured? Because WIP, what is the work of WIP? It will take in raw material, it will convert it into finished goods. How much finished goods are manufactured? Whatever finished goods are manufactured, they no longer remains WIP. Now they are not WIP. They are finished goods now. So finished goods which are manufactured is of 2 lakhs rupees. Where this 2 lakhs rupees will go? First try to understand the debit side, then we'll be going to credit side. What is debit side? There was an opening WIP of 20,000. There was a direct raw material of 6,000, which increases the cost of WIP. There is direct wages of 40,000, which will increase the cost of WIP. There is a factory overhead absorbed of 1,04,000, which will increase the cost of your goods which are in process. There is a factory overhead under absorption of overhead. Because of normal reasons, you have got 2,000 rupees extra. Whenever it is a normal reason, we have understood this. Whenever under absorption or any loss is because of normal reason, it increases the cost of production. See, this 2,000 rupees is increasing the cost of production. And administrative overhead related to production, which is absorbed by WIP, is 40,000. So total cost comes to 2,12,000. Out of which we have manufactured finished goods of 2 lakhs rupees. And it is very obvious where it will go. 2 lakhs rupees will go in finished goods control account. Finished goods issued to, or WIP converted finished goods is 2 lakhs rupees. It will go in finished goods control account debit side. It will be returned to WIP, which will be finished goods transfer, and it is how much rupees? 2 lakhs. We are still in WIP account. This is WIP control account. Our WIP control account is tallied? No, there is a difference of 12,000 rupees. And if 2,14,000 is total cost, if 2 lakhs rupees are finished goods, that means that 12,000 rupees is nothing but closing stock of WIP. How much is closing stock of WIP is 12,000 rupees. This is nothing but closing stock of WIP, which is 12,000 rupees. My WIP control account will be absolutely tallied. I am going to next account, which is finished goods control account. There was under absorption of 1,000. Because of normal reason, finished goods will bear that cost. Administrative overhead absorbed, because they were not directly related to production, it will be absorbed by finished goods, which is 20,000. And finished goods manufactured by WIP, that is nothing but cost of finished goods, which is 2 lakhs rupees. And even there is an opening stock of finished goods of say 10,000 rupees. So finished goods debit side will comprises of opening stock, factory overhead which are under absorbed because of normal reason. If they are abnormal reason, it will go to costing P&L account, but if it is normal reason, it is divided into WIP finished goods and cost of sales. What is the total of this? 2,31,000. So it is 2,31,000. Where finished goods will go? Please understand, 2,10,000. The cost of 2,10,000 goods were sold. So it will be transferred to cost of sales by cost of sales. This is COGS. It is not sales value. It is cost of goods which are sold. And it was how much? 2,10,000. So what will be cost of goods lying in go down? 21,000, because total is 2,31,000. This will be closing stock of finished goods. This is nothing but closing stock of finished goods. We had taken in raw material also opening stock and closing stock. Yes. My finished goods account is absolutely 10. But whatever is transferred to cost of sales, I should transfer it to cost of sales, which is 2,10,000 rupees to finished goods control account. What is the total cost of sales? Please try to understand. WIP has transferred the cost to finished goods. So finished goods has transferred cost to cost of sales, which is 2,10,000 rupees. Selling and distribution overhead absorbed are 60,000 because it is absorbed directly by cost of sales. And factory overhead under absorbed, we have understood, if there is under absorption because of normal reason, it will be distributed to cost of sales. A portion of it will be distributed to cost of sales. So this is 2,71,000. Total is 2,71,000, which is nothing but cost of sales. Where this 2,71,000 will be transferred? This will be transferred to costing P&L. 2 lakh transferred to costing P&L account, which will be 2,71,000. So in costing P&L account, it will come on debit side. 2,71,000 to cost of sales. We are talking something about sales account. When you sell goods on credit or you sell goods on cash, both will be having only one journal entry. Sales goods goes out. What is the normal effect of sales? It is credited. Cash account debit to sales or debtors account debit to sales. Instead of that, I will be passing the journal entry GLA account debit to sales, and it is the 5 lakhs rupees by GLA, which is 5 lakhs rupees. GLA debit side to sales account 5 lakhs rupees. Where sales account should be transferred, sales account should be also transferred to costing P&L account, which is nothing but ₹5 lakhs. Sales will come over here, which is nothing but 5 lakhs rupees. What is the journal entry? Sales account debit to costing P&L account, where sales will be transferred to costing P&L account. We have got costing P&L account. We are solving costing P&L account. 5 lakh minus 2,71,000 minus 10,000 minus 6,000. This will be nothing but costing P&L. Profit and loss determined by cost accounting system, which will be 5 lakhs minus 6,000 minus 10,000 minus 2,71,000, which is 2,13,000. Where it will go? Because we don't prepare balance sheet. If we don't prepare balance sheet, it should go somewhere. Where it will go is nothing but general ledger adjustment account. What is the journal entry which is passed? Costing P&L account debit to GLA. So in GLA, it will be written on credit side, which is nothing but by costing P&L. What was the figure? Figure was 2,13,000. And this account will tell you, which is nothing but costing P&L account. Last account pending is general ledger adjustment account. Please understand, here we have not taken opening balance of general ledger adjustment account. Whatever is the opening balance of general ledger adjustment account, it will be normally on credit side by opening balance. I am not taking actual opening balance, and balancing figure will be nothing but closing balance of general ledger adjustment account. And this is how my general ledger adjustment account will tally. And this will be end of my non-integrated cost accounting. Which all accounts I will prepare? Please understand which all accounts I will prepare. I will be starting with raw material stores or control account, wage control account. Direct raw material, I will be transferring it to WIP. Indirect, I will be transferring it to factory overhead. Wages, direct wages, I will be transferring it to WIP. Indirect wages, I will be transferring it to factory overhead. I will be also preparing factory overhead account. Factory overhead will be absorbed by WIP. Whatever is under absorption If it is because of abnormal reason, it will go to costing P&L account. If it is because of normal reason, it will go to WIP, finished goods and cost of sales account. We will be preparing administrative overhead account. It will be absorbed if it is directly related to production by WIP. If it is indirectly or not directly related to production, it will be absorbed by finished goods account. Selling and distribution account is absorbed always by cost of sales. If there is under absorption in selling and distribution, it will be directly transferred to costing P&L account. Then we went to this WIP control account. What we did in WIP control account? Our raw material were taken in, all the costs were taken by WIP, and it manufactured finished goods of rupees 2 lakhs. 2 lakhs rupees were transferred to finished goods account, and remaining 12,000 is nothing but closing stock of WIP. Then we will be preparing finished stock account. Finished stock account will be having its own expenditure. There might be some under absorption which are normal. Administrative overhead absorbed which is not related to production is directly absorbed by finished goods account. Opening stock on debit side, and whatever cost WIP has transferred is on debit side, which is 2 lakhs. Finished goods account again is a stock account. Debit what comes in or increase the value of the stock. Credit what goes out or decreases the value of the stock. You have sold goods costing rupees 2 lakh 10,000, so it will be transferred to cost of sales. And closing stock of finished goods is 21,000. Then we went to cost of sales. Before that, we did sales account. Sales account again, whatever is sold will be written on credit side and debit will be GLA. The balancing figure of the sales account, which will be normally the total figure, will be transferred to costing P&L account. So costing P&L account, credit side will be having sales. Debit side will be having cost of sales. Thus, cost of sales. This was transferred from finished goods control account. There was a cost of sales already there. There is some under absorption of overhead which is because of normal reason. Selling and distribution is directly absorbed by cost of sales. This was cost of sales account and it was also transferred to costing P&L account, and we ultimately got answer of costing P&L, which is 2,13,000 rupees. We have not prepared cash account. We have not prepared debtors account. We have not prepared creditors account. These accounts are prepared. We have not prepared trial balance, trading account, profit and loss account, balance sheet. These are prepared by financial books of accounts. Cost accountant just prepare this many books of accounts to find out its cost of sales, to find out closing stock of WIP, closing stock of finished goods, closing stock of how much units or how much cost of goods you have sold. This all can be found out by costing accounting system, and this is non-integrated accounting system. Let me write down, because it was not much visible in that case, let me write down which all accounts we prepared. We prepared raw material control. We prepared wages control, factory overhead, administrative overhead, selling and distribution overhead, WIP, finished goods, cost of sales. We prepared even sales account and we prepare costing. And of course, there was one account that we prepared was general ledger adjustment account. What we'll be doing is, we'll be solving one question of non-integrated costing system. We will be drawing all books of accounts, relevant books of accounts, and we'll be solving full-fledged, and then we will be learning journal entries for non-integrated books of accounts. So let us solve this one question, C6.1. First I am reading the question and then I'll decide which all accounts I'll be preparing. On 31st March, the following balances were extracted from the books of a Supreme Manufacturing Company. Stores ledger control account 35,000. This is opening balance. WIP control account 38,000. Finished goods control account 25,000. Cost ledger control account, which is nothing but general ledger adjustment account. The name is different, otherwise the concept is same. It is a temporary account which is just prepared because we don't prepare debtors, creditors, cash and other financial books of accounts, which is 98,000. These all are tallied. We will be using concept of our books of accounts. If it is a tallied sheet, I will be giving one effect. If it is untallied figure, I will be giving dual effect. These all are untallied, so we will be giving two effects for it. Raw material purchased, returned to suppliers, issued to production, returned to stores. Productive wages 40,000, 25,000. Factory overhead expense incurred 50,000. Selling and administrative expenses incurred. Cost of finished goods transferred to warehouse. Cost of goods sold. Sales. Factory overhead are applied to production at 150% of direct wages. Any under or over absorbed overhead being carried forward for adjustment in subsequent months. So you don't have to give effect of under absorption and over absorption of overhead. It should be carried forward to subsequent months. All administrative and selling expenses are treated as a period cost. Administrative and selling expenses are treated as period cost and are charged off to P&L account of the month in which they are incurred. So there will be no under absorption, over absorption. Show the following accounts. Cost ledger control account, which is nothing but general ledger adjustment account. Work in progress control account. Factory overhead control account. Stores ledger control account. Finished goods account. Costing P&L account. Trial balance as at 30th April. This was as on 31st March. And we need to prepare as on 30th April. So the question is of 1 month and we need to prepare non-integrated books of accounts for the period of 1 month. So I have prepared all books of accounts. Now what I will be doing is I will be transferring first this trial balance to my ledger accounts. They will become opening balance for my period. So stores ledger control account is nothing but opening raw material. It were closing raw material as on 31st March. So it is opening raw material as on 1st April. Stores ledger control account debit side 35,000 to opening balance 35,000. One effect because it is a tallied sheet. We have understood this in accountancy. Tallied figure I will be giving one effect. Other all figures I will be giving dual effect. Work in progress is nothing but opening WIP. Opening WIP is 38,000. Finished goods control account is nothing but opening finished goods, which is 25,000. So in finished goods account, opening will be 25,000. Cost ledger control account is nothing but GLA account. GLA account credit balance is 98,000 by opening 90,000. For any other figures, I will have to give dual effect. So for any figures I am taking from here, I will have to give two effect. Raw material purchased 95,000. What will be journal entry? Stores ledger control account or raw material control account to cash. No, to GLA account. It is 95,000. So it is stores ledger control account debit to GLA. In bracket you can write down it is purchased, which is 95,000. In GLA account it will be credit side 95,000. By stores control account 90. I'll normally tick mark it when I have done it. Return to suppliers. What is the journal entry? Creditors account a debit to raw material? No. GLA account a debit to stores control account 3000. See, you should be logically also clear. If you return raw material to supplier, your raw material stock will decrease. So in stores control account, it will always return on credit side. Debit what comes in, credit what goes out. This is going out 3000. GLA account debit side to stores control account 3000. Material issued to production. These are direct materials which are issued to production. What will be the journal entry? WIP account debit, because if materials are issued to production, it will go in WIP, so I am debiting it. It will go out from raw materials, so I am crediting it. I will credit raw material or stores ledger adjustment account by 98,000 by WIP. You can write down it is issued to production, which is 98,000. WIP, this raw materials are coming in. It is cost for WIP, so it will be written on debit side 98,000. Raw material control, which is 98,000. Next is raw material returned to stores. What does this mean? The raw material were issued to production. Now production is giving back this raw material to raw material department. Why? Because they might not be usable, they might be excess in stock, they might not be having storage space, anything might be the reason. But they are returning raw material to the stores department. So it will come in raw material stores department. So it should be written on debit side. Written from stores. What is the figure? 3,000 rupees. See, logically also it should be clear. We are drawing stores control account. It is raw material stock account. Stock is coming in. From where? Production is sending back this raw material to stores department. And so, who will be credited is WIP. Stores ledger control account debit to WIP. These raw materials are not returned to suppliers. They were issued to production. Because of some reason, production has given it back to raw material stores department. Productive wages. Productive wages is incurred. So when it is incurred, what journal entry you pass? Wages account debit to GLA, not cash. Wages account debit to GLA, 40,000. Wages account debit to GLA, 40,000. And we know they are direct wages. It is written, it is productive wages, so they are direct wages. We are knowing it. GLA account will be credited by 40,000 by wage control account, 40,000. Indirect labor is 25,000, which is incurred. Again, I'll be passing same journal entry. Wages account debit to GLA, because they are incurred. I will not be passing the journal entry wages to cash, but wages to GLA, 25,000. Wages account debit to GLA, but they are indirect. 25,000. What is the journal entry passed? Wages account debit to GLA. GLA will be credited by 25,000 by wages control account 20. Factory overhead expense incurred. Factory overhead control account to GLA. We never write down cash. Factory overhead expense account debit to GLA. 50,000. They are incurred or absorbed? They are incurred. So only it is written on debit side. Absorbed is written on credit side. These are incurred. And GLA will be credited by 50,000 by factory overhead. Selling and administrative expenses 40,000. So please understand, I need not draw administrative and selling and distribution overhead separately. I can draw it in one. Administrative and selling overhead, because they have given the combined figure, which is 40,000 to GLA 40,000 rupees. GLA account credit by selling and distribution. This is one of the most important and somewhat difficult. Cost of finished goods transferred to warehouse. Cost of finished goods which are transferred to warehouse. Believe me, this is not finished goods which are transferred to cost of sales. These are finished goods which were manufactured in WIP, which are now transferred to your finished goods warehouse. Please try to understand. Even I am changing the color where I am writing it down, this 2,13,000 rupees. From WIP it will go out by transferred to finished goods. These are cost of finished goods manufactured, which is 2,13,000. Where it is transferred to warehouse, and warehouse is nothing but finished goods account. To WIP account 2,13,000. This will be the journal entries. What is the journal entry? Finished goods control account debit to WIP. What you have done? Whatever finished goods were manufactured in WIP department will be transferred to warehouse, which is a finished goods department. So this was a good point, 2,13,000. See, normally people write down this on credit side of finished goods. Why? Because they think it is finished goods are transferred. Yes, but finished goods are transferred by whom? They are transferred by WIP to finished goods. Finished goods are transferred whatever is sold to cost of sales. It does not transfer cost of finished goods. It transfers cost of sales. Cost of goods sold is 2,10,000. Now this I can write it down. Cost of goods sold is 2,10,000. Where it will be transferred? It will be transferred in cost of sales. Cost of goods sold will be transferred to cost of sales. What is this? Please try to understand. The finished goods which are not now in warehouse. What is this? Finished goods stock account. Finished goods stock account is nothing but warehouse of finished goods. Cost of goods sold are goods going out of the finished goods and coming in cost of sales. That is sales department, which is nothing but 2,10,000 will be debited to cost of sales. Sir, cost of goods sold goes out in finished goods department. Yes, they are issued to sales department, which is 2,10,000. Sales is 3 lakhs by GLA 3 lakhs rupees. GLA account debit to sales. GLA debit side 3 lakhs. To sales account 3 lakhs. Alright. Factory overhead are applied to production at 150% of direct wages. So how much factory overhead will be absorbed? What is the blanket rate? 150% of direct wages. So what are my direct wages? 40,000. 40,000 into 150% will be 60,000. 60,000 rupees is overhead absorbed, factory overhead absorbed by production. So 60,000 rupees is absorbed by production. Who is production in our case? Who is producing the goods? WIP is producing the goods. Once the goods are produced, they transfer it to finished goods department. WIP 60,000 and WIP it will be written on debit side 60,000. What is this? Factory overhead. Incurred? No. Incurred is 50,000. Absorbed is 60,000. It is absorbed. So we have done this. Any under or over absorbed overhead, we will not be giving treatment, but we will just carry it forward to subsequent month. All administrative and selling expenses are treated as a period cost and charge off to P&L account. So whatever is incurred, that will be absorbed. There is no under absorption and over absorption. P&L account for the month in which they are incurred. Prepare this all accounts. We are already preparing this all accounts. Now, in cost accounting system, it will be somewhat easy because you will have to go one by one accounts. It will not be like single entry system in accountancy where you will first have to tally some other account and then come back to, you can go sequence wise. So I am going to stores ledger control account. Opening is given, issued to production is given, returned from production is returned from production is given. This is purchase is given. Opening is given, purchase is given, returned from production is given, issued to production is given, returned to supplier is given. What will be the closing? Sir, can't it be indirect raw material issued to stores? No. A good idea is to keep it as a closing stock. See, if there are some indirect materials which are to be transferred to factory overhead, they might have told you that these are the indirect material which were absorbed by overhead. In absence of information, this should be taken as a closing stock of raw material, which will be nothing but 35,000 plus 95,000 plus 3,000 minus 3,000 minus 98,000. Which is 32,000. Never give one effect. When you are writing down accountancy, you will have to give two effects. Where second effect will go, it will directly go into trial balance. It is a balance, so it will go in trial balance. Debit side 32,000. And this is nothing but a stock of raw material. You can also write down stores ledger control account. It is one and the same. I have tallied my stores ledger control account. Let me go to wages. Please understand, normally wages go into WIP if they are direct. If they are indirect, they will go into factory overhead. So direct wages, I will be transferring it to WIP. 40,000. So WIP will be debited by 40,000, which is nothing by wages control account, which are direct wages. and indirect wages will be transferred to factory overhead, which is 25,000. It is clearly given they are indirect. So factory overhead will be debited by wages which are indirect, which is 20. I have tallied wage control account. Let me tally factory overhead account. How I will tally? What is the factory overhead first? Incurred we have 50,000. There were indirect wages of 25,000. So total incurred is 75,000. Out of which 60,000 are absorbed. So under absorption is 15,000. Sir, it is abnormal, normal, we don't know. It is advisable to transfer it into next month. That is directly written. Forward adjustment in the subsequent month. Any under and over absorption will be carried forward in adjustment to subsequent month. Why it is logical, understand. You are not preparing this books of accounts for 1 year. You are preparing it for 1 month. In current month it is under absorbed. It is possible in next month it will be over absorbed. So you need to take it in next month. So what is under absorption of overhead? 15,000 will be balance carried down. You cannot pass one effect in accountancy. Where the second effect will go, it will go in trial balance. 15,000 rupees factory overhead carry forward. Where it will go in next month, that is in the month of May, it will go on debit side of factory overhead account, saying it was under absorbed in previous month, which is 15,000. We have tallied factory overhead also. Administrative overhead is 40,000 and they have told that current month overhead should be absorbed in current month. So there is no under absorption, over absorption. Also, I will not be treating it as a part of production. So I will be transferring it to finished goods account, which is 40,000. Finished goods account debit side, 40,000, which is nothing but selling and distribution. Selling and distribution overhead are not a part of cost of production. They are part of cost of sales. Remember cost sheet. What we do? Cost of production plus opening stock minus closing stock will be nothing but cost of goods sold, plus administrative and selling overhead will be nothing but cost of sales. So this is incorrect. Selling and distribution overhead are not transferred to finished goods. They are transferred to cost of sales. At what rate? 40,000. It will be cost of sales. 40,000. It is selling and distribution. So this is the mistake I have done even in my Excel sheet. So when I was doing selling and distribution overhead, yes, I have transferred it to cost of sales. So in Excel sheet, I have not made any mistake. We have just made mistake over here. So it is cost of sales, selling and distribution overhead, 40,000. Have I given two effects? Yes. Administrative overhead and selling and distribution overhead are also tallied. Let us go to WIP account. Opening is given, direct raw material which are absorbed by WIP, factory overhead absorbed by WIP, wages which are direct, raw material which are returned we have credited, transferred to finished goods. So WIP which was converted into finished goods, we have transferred it to finished goods. Balance should be closing WIP. What will be closing WIP? 38,000 plus 98,000 plus 60,000 plus 40,000 minus 3,000 minus 2,13,000 which is 20,000. I never give one effect. Second effect will go in trial balance. WIP stock is 20,000. I have closed my WIP account. Opening stock of finished goods was 25,000. WIP is 2,13,000. Cost of sales is 2,10,000. So these are cost of goods sold which is transferred to cost of sales account. Balancing figure will be closing stock of finished goods. It is 2,38,000 minus 2,10,000 will be 28,000. I don't pass one effect. 28,000 is nothing but finished goods stocks. Sales account will be transferred to costing P&L account. Which is 3 lakhs rupees. Costing P&L account will be credited by 3 lakhs. 3 lakhs. Cost of sales 2,50,000 will be also transferred to costing P&L account, which is 2,50,000. How it is 2,50,000? Selling and distribution overhead 40,000 and cost of goods sold is 2,10,000. COGS plus selling and distribution overhead. You can see your cost sheet. COGS plus selling and distribution overhead will be cost of sales. 2,50,000 is nothing but cost of sales transferred to costing P&L account. 2,50,000 is nothing but cost of sales which is transferred to costing. What is profit? 50,000 by in bracket profit, which is 50,000, which will be transferred to general ledger adjustment account. Here we are not preparing any capital account where it will be transferred. So it will be transferred on credit side by costing P&L, which is nothing but. So even my costing P&L account has tallied. Now I need to find out balance of GLA. Normally it should be on credit side. Let me find out. 98,000 plus 95,000 plus 40,000 plus 25,000 plus 50,000 plus 40,000 plus 50,000 minus 3,000 minus 300,000, which is 95,000 is nothing but closing balance. My general ledger adjustment account is also tallied. GLA. This balance, I need not give one effect, I need to give two effects. 95,000. And if our all the effects are correct, this should tally. 32,000 plus 15,000 plus 20,000 plus 28,000, which is 95,000. So this is 95,000. This is 95,000. So current month's costing books of accounts are tallied. Next month again we will be preparing all these accounts, will be carried forward the balance and will be preparing same types of books of accounts. This is non-integrated method. Why non-integrated method? We are not combining financial books of accounts with this. What we are doing is we are preparing a separate books of accounts only for costing purpose. So they are termed as non-integrated books of account. Sometimes even an accountant who is preparing costing books of accounts is different. He prepares this type of account only. He is not responsible to prepare trading account, profit and loss account and balance sheet. He prepares only this type of accounts. What we'll be doing next is we are again in non-integrated system. We will be writing down situation or transaction and we will be passing journal entries. Sir, it is required. Yes, absolutely. Sometimes they will directly ask the journal entries. They will not tell you to prepare directly ledger accounts. They will tell you to only pass journal entries. So it is required. Let us write down one by one all the situations and pass the journal entries. Number one is purchase of raw material. What will be journal entry if you purchase the raw material? Raw material control account, which is also termed as the stores control account. So I'm not writing down stores control account. Stores control account and raw material control account is one and the same. 2. General ledger adjustment account. Raw materials are coming in, so raw materials control account will be debited. Number 2 is return of raw material to suppliers. It will be reverse journal entry. Your raw material are decreasing, so to raw material control account, and GLA will be debited because you are not preparing your creditors account. Third is good. Materials directly issued to production. Let me not write down issued. Purchased by production without routing it through raw material control account. Materials directly purchased by production without routing it through raw material control account. See what happened is, say Mr. X was manager of raw material control account. Raw material control account, X was manager, and production, Y was manager. Some emergency raw materials were required in production. So what Y did, he purchased raw material from market. So raw material never came in raw material stores account. It was directly issued, directly purchased by production department. What journal entry I will pass? Of course, I cannot debit raw material control account. This raw material are directly taken by production. So WIP control account debit to cash? No, to GLA. So if they have not routed it through raw material control account, we are also not routing it through raw material control account. We are directly, this raw material are used by production, so ultimately it will go in WIP. We are directly debiting WIP control account to GL. And we have done this in previous question itself. Return to stores by production. So raw material were issued to production. Now it is returned by stores to production. Then it will be raw material control account to WIP. Okay, we did return to stores, but we have not done issued to production. Let us do in fifth situation. Issued to production. Raw material issued to production. It is a WIP control account debit to raw material control account. Raw material issued to production, WIP stock will increase, raw material stock will decrease. Raw material issued to factory for, say, maintenance. Now I cannot debit WIP account because ultimately it is not a direct expenditure, it is overhead. So factory overhead control account to raw material control. And a good point again. Normal loss of raw material. See, any normal loss should be absorbed by production, but a normal loss of raw material is overhead. So factory overhead control account to raw material control account. Sir, if it was abnormal, then I would have debited costing P&L account to raw material control account. See, raw material control account is a stock account. You will have to credit it because there is a loss. Abnormal loss, let us even write this down. Abnormal loss of raw material should be transferred to costing P&L account to raw material. See, normally this will not happen. Why this will not happen? Because if there is an abnormal loss in raw material control account, it will be absorbed by good raw materials produced. So the raw material price will be automatically inflated and this journal entry will not normally be required. But if sometimes they want to ask some difficult question, they can ask this. 9. Wages incurred. It is wages control account to GLA because we are not preparing cash account. Direct, indirect, anything which is incurred, same journal entry, it is passed. 10th, direct wages will be absorbed by production. Who will absorb direct wages? WIP account debit to wages control account. And who will absorb indirect wages? Indirect wages absorbed. Indirect wages are factory overhead. So it will be absorbed by factory overhead account debit to indirect wages, wages control account. After raw material wages, we can go to overhead. Factory overhead incurred. It is a factory overhead control account debit to GLA because we cannot credit cash. Factory overhead absorbed by production, by some blanket rate, by ABC, by anything, but for whatever is absorbed by production, the journal entry will be WIP cost will increase and factory overhead cost will be credited because it is transferred to WIP. Now it is actually absorbed by production. 14th one. Under absorption of factory overhead. If it is because of normal reason. See, under absorption will be written on credit side, that we have done. Under absorption, if not written on credit side, it will not tell you. So factory overhead is credited. If it is because of normal reason, who will take the cost? Three accounts will take the cost. WIP account, finished goods account, and cost of sales. Please understand this concept. We have done it in overhead. It is not a new concept. This we have already done it in overhead. And if it is because of abnormal reason, it is directly transferred to costing P&L account to factory. You can write down. Sometimes it's also carried forward. Like in previous example, we have not done anything of under absorption. We just carried it forward. Good point. Over absorption of overhead. If factory overhead are absorbed more, then factory overhead will be debited, believe me. then it depends what effect you are giving, because over absorption is also having 2 or 3 effects. What is one? Being a small amount, you can write it off to P&L account. For next year, you can carry it forward. Those are the 2 effects which you can give for over absorption of our overhead. So if you want to write it off in P&L account, it will be transferred to costing P&L account. Or you can even create a reserve, or you can carry it. 16th, administrative overhead incurred. It is administrative overhead control account debit to GLA. It is incurred and not absorbed. 17. Administrative overhead absorbed. Who absorbs administrative overhead? If it is directly related to production, it will be absorbed by WIP. WIP account debit to administrative overhead. If it is not related to production, administrative overhead will be absorbed by finished goods. Finished goods control account debit to administrative. 18. Under absorption of administrative again, if it is of normal reasons, you can transfer it to finished goods control account, cost of sales account to administrative. There is another view in this. Administrative overhead, if under absorbed, can be transferred to costing P&L account even if it is normal. Because administrative overhead under absorbed should be treated as an abnormal item. There is nowhere administrative overhead which are under absorbed. And this happens even if it is abnormal. You can learn it in this manner. If it is normal, it is transferred to finished goods control account, cost of sales account. Abnormal, it will be transferred to costing P&L. Over absorption remains same, right? Whatever effect you are giving for factory overhead over absorption, it remains same. 19. Selling and distribution overhead incurred. It is a selling and distribution overhead control account debit to GLA. selling and distribution overhead absorbed. It will be absorbed always by cost of sales. Now let us transfer and understand this particulars. All cost from WIP to finished goods or finished goods to cost of sales. Whatever goods of WIP are transferred to finished goods, that is cost of goods, and sometimes it is also written finished. Transferred from WIP to finished goods. What will be the journal entry? WIP will be credited, finished goods will be debited. Finished goods control account debit to general ledger adjustment. (22) Cost of goods sold. Now see, WIP will transfer to finished goods whatever is manufactured. Finished goods will transfer to cost of sales whatever is sold. And cost of sales will be transferring all its cost to costing P&L account. So it will be like this. WIP will transfer to finished goods cost of production. Finished goods will transfer to cost of sales, COGS. COGS transferred from finished goods to cost of sales will be cost of sales account debit to finished goods control (23) Cost of sales transferred to costing P&L. Costing P&L account debit to cost of sales. Let us also do something about sales account. Whenever you sell the goods, what is the journal entry? GLA account debit to sales. Sales transferred to costing P&L. Will be sales account debit to costing P&L. (26) Profit of costing P&L will be transferred to costing P&L account debit. It will not be transferred to capital account, it will be transferred to GLA account. Sir, if there is loss, you should be intelligent enough to do this. GLA account debit to costing P&L. So we are not writing down a separate entry. If it is a loss, it will be a reverse journal entry. So if you are knowing some portion of costing like absorption costing, how to deal with under absorption, over absorption, and you know this 26 journal entries, you can always write down non-integrated books of costing accounting.